Welcome back. Hope you all are doing good and had a good day. It's mid of the day that we are actually discussing, and for few people in the region of Europe, it's going to be early morning today. So the session today is actually of going to be a mock debrief session. You people were sent across a mock examination paper by the ACCA, and I'm hoping that you people would have already gone through the mock examination paper, because our objective right now is going to be that we shall be going through that mock examination. The mock examination is not something out of something that you don't know. It's actually the last attempt examination paper that's available at the ACCA website. That's what they have extracted, and that's what they have given you as a mock examination. So what we are going to do is we are going to start discussing about this mock examination. सिस्टम स्टक हो गया, आंसर भी अपलोड कर दूंगा, मसला नहीं। सिस्टम एक्चुअली स्टक अप हो गया। Okay. Now let's just start off. We're going to start off with this mock debrief. So the first thing is basically the mock examination paper that you had received. It's the same paper as the last attempt paper that is available on the ACCA's website. The March-June 2017 question paper, and along with that the answer. So let's have a quick discussion about all this. The first requirement, the first question in this specific area is, okay, let's just talk about this June 2017, question number 1. So if I talk about this question, it says you are a manager in Holy & Co., a firm of chartered certified accountants, and you are responsible for the audit of Laurel Group, the group. So this is a question on the group audit. So you are a manager responsible for the audit of the Laurel Group with financial year ending 31st May. The group produces cosmetics and beauty products which are sold under the various brand names and are globally recognized. Furthermore, it says which are sold in more than 100 countries, so you sell it in 100 countries. What exactly is it? It says it's time for you to begin planning the audit of Laurel Group. I've provided you with some information, etc., etc. Now, the question's requirement is evaluate the risk of material misstatements to be considered in planning the group audit. Your evaluation should utilize the analytical procedures as a method for identifying the relevant risk. Now, if you come across such a scenario where there is a 16-mark requirement, so what exactly is going to happen with a 16-mark requirement? Generally speaking, we talk about it that 1 mark is equivalent to 1 point. 1 mark is equivalent to 1 point. That's what we talk about. Now, if I talk about this specific scenario, you would come across this thing that you have been given the financial statements of this entity. So if you have been given the financial statements of the entity, the analytical procedures would actually involve. The first thing that you can do is you can calculate the various ratios which are relevant to this scenario. What you can do is that you can calculate the various ratios relevant to this specific scenario. Now, if I talk about it, how can we calculate the various ratios? So you have this property, plant, equipment, then you have got a goodwill. So the goodwill is unchanged, which actually indicates that there is no as such impairment. The intangible assets are acquired, the development cost, the equity, the total non-current assets, then the current assets, the equity and liabilities, debenture loans, deferred tax, etc., etc. Then you've got a revenue where there is an increase in the revenue, the operating expenses are there. At the same time, finance costs, etc., etc. Now, the next thing is the capital expenditure of 20 million has been recorded so far during the year. The group's accounting policy is to recognize cost less accumulated depreciation, etc. Then there are etc. these things. So the first thing that you need to do over here is, while performing the analytical procedures, you need to calculate the relevant ratios. Now, you see, whenever we perform the analytical procedure in accordance with either 520, so the analytical procedures involve various things. Now, what are the various things that the analytical procedure would involve? You can either perform the trend analysis. The first thing that you could do is that you could either perform the trend analysis, that's number one. And in addition to the trend analysis, what else you can do? You could calculate the various ratios. You could calculate the various ratios which are important. So you can calculate the various ratios which could actually be the ratios of, say, the profit margin, could also be the ratios of gearing, could also be other liquidity ratios. These are the various ratios that you can calculate. So in this case, you could perform a trend analysis by calculating the change in the revenue, by calculating the change in the operating expenses, and the operating profit is actually decreasing despite an increase in the revenue. That means the operating expenses have actually increased a lot. Then there's the profit before tax, and then there is this tax expense which is the same, so which is then again a question mark. So you see, if I could just recall that what is the risk of material misstatement. So whenever we talk about the risk of material misstatement, so the risk of material misstatement is the risk that the financial statements are materially misstated. So what as an auditor you should do when it comes to this risk of material misstatement? You calculate various ratios, you calculate various trends, and you actually calculate them, and you actually identify amongst them that what is going wrong, what is happening. So in this scenario, what you are supposed to do is that you are supposed to calculate the change in the sale, so the delta in the sale. At the same time, you are supposed to calculate the delta in the operating expenses. You were supposed to calculate the profit margin for both the years, which is year 1 and year 2. And you also had to calculate the tax rate. How would have you calculated the tax rate? That would have been tax divided by the profit. You would have calculated it as tax divided by the profit. So that's how it is. And what else is there? The tax expense, and then you have the profit for the year. So this is all that you get. Now, so that means that these are the 4 ratios that we can calculate. 1, 2, 3, 4. So that gives you total 4 marks. Now the next situation is, it says evaluate the risk of material misstatement. So I'm going to discuss that what could be the risk of material misstatement in this scenario. So let's just talk about it. Now first of all, it says Holly Company was appointed as group auditor 3 years ago, and firm audits all components of group, which is a listed entity. So it's a listed entity. Group sells its products under well-known brands, most of which have been acquired with subsidiary companies. Most have been acquired using the subsidiary companies. Group is highly acquisitive, and there are more than 40 subsidiaries and 50 associates within the group. So now number 1 of them is basically, when we talk about the risk of material misstatement in this case, one of them is basically it's a complex group structure. And whenever there is a group accounting scenario, so you have got certain issues. Number 1 of them is basically the segment reporting in accordance with IFRS 8, that this is not done. In addition to this, there could also be related party disclosures. There could also be related party disclosures, which are also important. If you move further, it says products include cosmetics, hair care products, and perfumes for men and women. Research into new products is a significant activity, and group aims to bring new products to market on a regular basis. So what does it say? The products include cosmetic, hair care products, and perfumes. Research into the product is significant activity, and group aims to bring new products to market on a regular basis. That means there's going to be a research and development expenditure, so the risk attached to that, that's also going to be there. In addition to this, they have given you the extract from the financial statement. So the extract from the financial statement, note 1, refers to the PPE. We'll talk about that. The goodwill, there is a risk that goodwill is not tested for impairment. Furthermore, there is this acquired brand names 115 and 80. So we'll see what has happened. For the intangibles, the development cost has increased. So there are various risks pertaining to the development cost. And what are those risks? That the research related expenses is capitalized. The development expenses are capitalized despite not meeting the criteria. Then there is this equity, and then the retained earning, and the NCI value has not changed. The NCI value has not changed. What does this indicate? This indicates apparently that there is no acquisition, or this might indicate that the profit for the current year has not been allocated or included. So the NCI is actually an issue. The NCI balance is an issue. What else? Then there is this debenture loans. So when we talk about this debenture loans, they have also increased. The deferred tax has also increased, resultingly all these things. So now let's just talk about them one by one. Now see, it says capital of 20 million has been recorded so far during the year. Group's accounting policies to recognize assets at cost less depreciation. During the year, a review of assets' estimated useful lives concluded that many were too short. and as a result, the projected depreciation charge for the year, is $5 million, less the comparative figure. Now, it says group's accounting policies to recognize assets at cost less depreciation. A review of estimated useful life concluded that many were too short, and as a result, projected depreciation charge for the year is $5 million, less than the comparative figure. Now there is a problem. When the lives are too short, so what will happen is the carrying amount is going to be divided by, let's say, if there was a carrying amount of, let's say, if I'll give an example, there was a carrying amount of 100,000 and that was being divided by 5 years, you used to get 20,000. But if the same carrying amount of 100,000 is now going to be divided by 3, so you will get a 33,000 rupee expense. So basically one thing that is not easily understandable is that it says the estimated useful lives concluded that many were too short, and as a result, the projected depreciation charge for the year is 5 million less than the comparative figure. So what they have done in the current period is they have reviewed the lives and they thought that those assets which had a life of 5 years in the last year now have a life of 7 years or 8 years. That's what they are doing. So that means the resulting thing is that the depreciation charge is reducing. Now what is the risk of material misstatement? The risk of material misstatement is, if you could see from the financial statements, the company has got a huge amount of operating expenses. The profitability is going down. So the depreciation or the change in the estimates of the depreciation could actually be one of the tactics to reduce. There could be one of the tactics to reduce the expenses or to understate the expenses in financial statement, resulting in overstatement of profits. So what is the risk of material misstatement? The estimates are incorrect. Estimates are incorrect. So what is the issue? That the estimates are incorrect. Now what else? It says acquired brand names are held at cost and not amortized in the ground that the assets have an indefinite life. Annual impairment reviews are conducted on all brand names. December 16, the Chico brand name was determined to be impaired by 30 million due to allegations made in the press and by customers that some ingredients used in Chico can cause skin irritations and more serious health problems. The Chico products have been withdrawn for sale. Now the Chico products have been withdrawn for sale, meaning that there are multiple risks. First of all, the brand has been impaired. Do we see a decrease in the value of the brand? So yes, we do see a decrease in the value of the brand, because 80 to 115, there is a 35 million decrease in the brand name. And if we see that the 30 million has been because of the Chico brand name. So that's one of the things which is apparently okay. Now the second thing is, have they recognized the inventory obsolescence? Because when we look at the financial statement, is there a change in the current asset? You could see that the current assets have instead increased. So what does this mean? This actually means that the inventory obsolescence has not been recognized. The inventory is apparently overstated. Now what else? Furthermore, it says 20 million loan was taken, the cash being used to finance a specific new product. The year end for this company is May 2017. The loan was taken in January 2017. And if I see, the finance cost has remained same. So that means the interest has not been accrued. What does this indicate? It indicates interest is not accrued. That's what it indicates, that the interest has not been accrued. Why? Because how could the financial statements or the finance cost remain unchanged? Yes, we should de-recognize the brand name in full if it has no value, but if it has a value that it could be sold, then you could recognize it, because the Chico brand name has been withdrawn, but doesn't mean that it has no value. So now Now it says the 20 million loan was taken out in January, the cash being used to finance a specific new product development project. So over here the finance cost has not increased. Now why is that so? Is that a risk? No, that is not a risk. Why? Because this was being obtained to finance a specific asset. This was being obtained to finance a specific asset, so in accordance with IAS 23 it should have been capitalized. Now if I see over here, the assets have increased by 78 to 92. It's around 88, 98. Assets have only increased by 15, 16. The only assets have increased by $16 million apparently. But the loan was actually $20 million. And in addition to this, the finance cost on this loan should have been capitalized. So what could actually be the risk? The risk is that the finance cost is not capitalized, or if it is capitalized, then not if it is capitalized, then return from temporary deposit is not capitalized. It says the deferred tax liability relates to timing differences in respect of accelerated tax depreciation on group's property, plant, and equipment. The liability has increased following changes to the estimated useful lives of asset discussed in Note 1. Now, it says the deferred tax liability has increased because of the change in the estimated useful life. Now, there are two issues. Now, what are those two issues? First of all, the deferred tax liability has increased, but the overall deferred tax rate has decreased. So, if the overall deferred tax rate has decreased, then what could be the issue? Is there a non-recognition of tax expense, or what exactly is the issue? That is something that you need to investigate. Furthermore, the NCI stands unchanged, so that's also another issue that you need to ask. Okay, somebody asking that can you explain the temporary deposit case? So I'm going to explain it. The temporary deposit case is actually that IS 23 states that if there is an entity who wants to, if the entity who has obtained a loan for the financing of an asset, construction of an asset, then the amount of the interest to be capitalized is the interest paid on that loan less the returns from temporary deposit. Like for example, if you have taken 20 million, apparently only 16 million has been invested. So the 4 million has been actually would have been deposited somewhere. It would have been deposited somewhere. Now, if it would have been deposited somewhere, so the problem that actually arises is, like if it would have been deposited somewhere, then the return from that deposit should be deducted from the cost that has to be capitalized. Okay, coming back to it. So it says your evaluation should utilize the analytical procedure. Now it says recommend additional information which would be requested from the group, which would allow a more detailed preliminary analytical review to be performed. So it's about that. What other details do you need to know for the more detailed preliminary analytical procedure? Can you just think of a few points in a minute or so, then we'll discuss. Okay. See, now if we have to perform the analytical procedures, so there are few things in the analytical procedures that we have not actually gone through in detail. And what are those things? You see, there are few specific ratios. Number one of them is the inventory holding period, which could actually indicate that for how long the inventory is staying unsold. The receivable collection period and the payables payment period. So all these things, how could you actually determine all these things? So these all things could be determined if we are all these things could be determined if we have the breakup of the current assets and the current liabilities. Right now they have not given us the breakup of current assets and current liabilities. So if they have not given us breakup of current assets and current liability, how could we actually calculate these ratios? So that's one of the problem, number one. The number two thing is basically you need to have a cash flow statement also. Why cash flow statement? Because cash flow statement gives you a better idea about how the company is functioning. I mean, is the company being able to generate cash flows from the operating activities or not? So these are the factors that are important. Okay, are there anything else that you could think of? Yes, Rarvin, you can do that. No, Navedu Rahman, deferred tax rate cannot be calculated. It's just the tax rate that needs to be calculated. It includes the effect of current and the deferred tax both. Okay, now recommend the principal audit procedures to be performed on the impairment of Chico brand and the planned acquisition of Azalea company. I'm gonna recall how we have discussed. We have gone through these areas earlier also. So it says recommend the principal audit procedures to be performed in respect of the impairment of Chico brand and the planned acquisition. So if I say, I always tell you that whenever you come across a scenario where the examiner asks you that you should you should actually advise the audit procedure. So I've told you that you need to think about the risk, because once you think about the risk, then you can actually talk about the audit procedure. So what are the risks over here involved? The risk here involved it says the impairment of the Chico brand. So when we talk about the impairment of Chico brand, so impairment of Chico brand would actually mean we have a risk that the impairment loss is not correctly calculated. Now, what could be issues? The fair value could be issue. The value in use has an issue with respect to the cash flow, with respect to the discount rate. The fair value could be an issue. The value in use could be an issue. With respect to the cash flows, with respect to the discount rates. And the third one of them is actually impairment loss not recognized in P&L. So these could be the various things. Now next is basically the planned acquisition of Azalea company. So if I could just read what is mentioned about the Azalea company. So for the Azalea company, it says group management is currently negotiating acquisition of Azalea company, a large company which develops and sells a range of fine fragrances. It's planned that acquisition will take place in early June 2017, and the group is hopeful that Azalea's product will replace revenue stream lost from the withdrawal of Chico's perfume range. Due to this is taking place, group management is hopeful that this will support the consideration of 130 million offered for 100% of Azalea company share capital. The bank has agreed to provide a loan for this amount. So now, what do they need to do? They need to actually know from you is the planned acquisition of Azalea company, what are going to be the procedures that you will be performing with respect to the acquisition of Azalea company. So obviously when it comes to Azalea company, we would be concerned about fair value of its net assets. We would be concerned about the consideration. We would be concerned about the goodwill calculation. So these are the factors that we'll be concerned about. So we would actually perform the procedures to identify these things. No. I'll just have a quick review of the answer to this question. So let's just have a quick review of the answer to this question. I would not in fact go through the answer. I would rather discuss the marking scheme. Okay, look at this question. The evaluation of risk of material misstatement. So see how it is. It says 1 mark for each ratio, including comparative. So that's what I told you. And half a mark for relevant trends. So every trend is going to be half a mark up to maximum of 5 marks. So you see a 16 mark scenario requiring analytical procedure, and there are only 5 marks for this case. There are only going to be 5 marks for the analytical. That means that's 1/3. So the maximum you need to target in any specific scenario where the analytical has to be done is 1/3. Now you could see the various risks in relation to ratio could provide understatement of operating expenses excluding impairment loss, finance cost, tax expense, current assets overstatement. Other risk of material misstatement up to 2 marks for each risk identified and explained is new loan. You always need to remember that whenever a financial instrument comes in, you can talk about IFRS 7 disclosures. PPE, useful life, the overstated assets and profits. That's a point that we did not discuss, but always remember I've discussed it earlier also, that management bias could arise whenever there is a need for financing. Inventories will be written off. Goodwill not tested for impairment. Deferred tax incorrect, likely to be overstated, etc. Now see additional information. The breakup of revenue, current assets breakup, current liabilities breakup, the audit procedure for impairment of brand name, Okay, let's move forward, and so this is all that we have discussed. Now let's move forward. Let's just discuss further. So now we're going to talk about the second question. And it says you are responsible for performing engagement quality control review on selected audit clients of Crocus and Company, and you are currently performing a review on the audit of Magnolia Group, the group. The group manufactures chemicals which are used in range of industries, etc., etc. It says Magnolia Company, it says Hyacinth Company, Geranium, and Daisy Company. So what's the requirement of the question? The requirement of the question is comment on quality of planning and performance of the group audit. So it talks about the planning and the performance of the group audit, discussing quality control and other professional issues raised. Recommend further actions, including relevant audit procedures to be taken by a firm prior to finalizing group auditor's report. Now, I hope you would have gone through this question, but just in case if you have not gone through this question, let's have a quick 2-3 minutes go through of the question. Okay, let's have a discussion. It says you are responsible for performing engagement quality control review on selected audit clients. It says group manufactures chemicals which are used in range of industries, with one of the subsidiaries, Daisy, specializing in chemical engineering and developing products to be sold by other group companies. Group products sell in over 50 countries. Group structure is shown below. All the subsidiaries are wholly owned by Magnolia. That means there is no as such for. Now, it says Crocus Company is engaged to provide audit of group financials and also the audit of Hyacinth Co. and Magnolia Company. Geranium, a new subsidiary, is audited by a local firm of auditors. So whenever you've got a local firm of auditors based on the company's head office, Daisy Company is audited by an unconnected firm which specializes in the audit of companies involved with chemical engineering. So apparently we are auditing the group, and we are auditing one of the components of the group, and two of the components are being audited by other companies. So that means there arises a need for the component auditors. So we shall have to consider the component auditors in our calculations. Now what else? It says the group financials year ended and the audit is on completion stage. With the auditor's report due to be issued in 3 weeks' time. Group's consolidated financial statement recognized profit before tax of 7.5 million and total assets of 130 million. So that's what the group financial statement recognized. Now see, it says the note from your review of the audit working papers are shown below, summarizing the issues relevant to each subsidiary. Now, if we talk about the various issues pertaining to each of the subsidiaries, number one of them is Hyacinth Company internal controls and results of controls testing. So it says the group companies supply each other with various chemical products to be used in the manufacture of chemicals. So what do they supply? They supply each other with various chemical products to be used in manufacture of chemicals. Now audit work performed at the interim stage at the Hyacinth Company, including walkthrough procedures and internal control evaluations, concluded internal controls over the intra-group transactions were not effective, and this was documented in the audit file. So the first thing is that they figured out that the internal controls were not effective. Now what else? At the final audit, tests of control were performed to confirm this to be the case. Tests of controls confirm intra-group transactions are not being separately identified in group's accounting system, and recon of amounts owed between subsidiaries are not performed. Group audit manager has concluded on the audit working paper that as intra-group balances are cancelled on consolidation, this issue has no impact on the group audit and no further work is necessary. Furthermore, it says as part of audit approach, it was determined to be that extensive testing would be performed over the internal controls for capital expenditure, as it was identified during planning that company had made significant acquisitions of plant and equipment during the year. Following controls testing, the internal controls over capital expenditure were evaluated to be effective, etc., etc. Now see, the first thing is, I did discuss yesterday also, that whenever we talk about the quality of the work performed, so what do we need to focus when it comes to quality of the work performed? So quality of the work performed actually means that are you performing all that is there in accordance with the either or not? Now number one, it says companies supply each other various chemicals, products to be used, etc. Now number one point is, when you figured out that the internal controls over the intra-group transactions were not, when you figured out that the internal controls over the intra-group transactions were not effective. So the first thing is that if the controls are not effective, then what is the reason for test of controls? What is the reason for the test of controls? When you know that they are not effective, then why waste time on that? Instead of test of control, you should have rather gone for substantive testing. When you have got an overall assessment that the test of control, the controls are not effective, you should not go for the controls as an auditor. You should then go for the test of details. Furthermore, the test of control confirmed that the intra-group transactions are not being separated. It was not needed when you already knew. So what you should have done is, because the question's requirement is comment on quality of the planning. The quality of the planning was very bad because the auditor's responses is part and parcel of the audit planning. So if you have actually planned the audit work, that was the loophole. And when it comes to performance, the performance of confirmed that intra-group transactions are not separately identified in group's accounting system, etc. So it says manager concluded on the working papers that intra-group balances are cancelled on consolidation. Therefore, this issue has no group audit and no further work is necessary. Now, for the intra-group transactions, you should have performed a lot of work. Now, what do you mean by a lot of work should have been performed on these intra-group transactions? A lot of work should have been performed on these intra-group transactions actually means that as an auditor, As an auditor, you should have, when it says that intra-group transaction, so as an auditor, what should have been done? As an auditor, you should have actually performed the procedures on them, like compared the intra-group transaction and traced them for the cancellation. What you should have done is you should have actually performed additional work um, like basically analyzing the ledgers and seeing if the balances have been eliminated or not. It's not just like that you gave an assumption that the transaction would have been cancelled out. So the question's requirement is quality of planning, at the same time quality of performance of the work. The third thing is the quality control. The third thing is the relevant audit procedure and the further actions. So the relevant audit procedure should have been that you trace the balances between the organizations and see if they have been cancelled out or not. That's what you should have done. The furthermore, any additional thing is that you should have discussed with management, and you should have asked them that if there are any other related party transactions that exist which have not been eliminated. So that all should have been done. Furthermore, it says as part of the audit approach, it was determined that extensive testing would be performed over the internal controls for capital expenditure. As it was identified during planning, the company had made significant acquisitions of plant and equipment during the year. Following controls testing, the internal control over capital expenditure were evaluated to be effective. Now it says, now if the internal controls were being tested and you figured out that the internal controls are very effective, now what next? The next thing is that you were supposed to, because it's not just about control, because if it's a significant acquisition, that means you need to perform additional testing. That means you need to have the additional procedures. So where there were procedures needed, you were not performing. Where there were tests of controls were not needed, you were performing the test of controls. So the point is that as an auditor, the quality of the work is not up to the mark, because they should have skipped the test of control and they should have gone for the substantive testing over here. Now next, working papers conclude that based on result of controls testing, it is reasonable to assume that controls are effective across the group and substantive procedure on property, plant, equipment in each group company, that's so and so. Now number one of them is you cannot conclude for the whole group because two of the components have not been audited by you. You should have communicated with the other auditors. The other auditors would have given you some idea. You would have tested their work, and then you can actually conclude if the test of controls are effective across the group or not. How can you conclude on the basis of one single subsidiary which you are auditing? You can't do that. Now see, the next one of them is Geranium Company, a new subsidiary. It says the subsidiary was acquired on 30th September 2016 and is audited by Fern & Co. So the subsidiary was acquired during the current year. The group audit strategy contains following statements in relation to audit of Geranium Company. It says Geranium will only be consolidated for the 3 months and post-acquisition profit for that period to be included in group financial is 150,000. On that basis, Geranium is immaterial to the group financials and therefore our audit procedures are based on analytical procedures only. Now, other than analytical, there is no documentation in respect of Geranium Company or its audit firm Fern & Company included in group audit working papers. It says draft statement of financial position recognized total assets of 30 million. It says draft statement of financial position recognizes total assets of 30 million. Now see, first of all, whenever you are auditing a group, then you need to assess, you need to perform tests for every single component if it's a significant component or not. Now, how do we know that if it's a significant component or not? So what you do is that you compare. What you simply do is that you compare the total profits of that component with the group profits. Similarly, you compare the revenue or you compare the assets. if any one of them exceeds 15% of the group, then it would be considered as a significant component. So here what they have done is they've simply calculated 150,000 and they've compared it with profit, which would give you a calculation of the material of the total amount of this group, and on the basis of that they've concluded that it's an insignificant group. Now that's an issue. Now what else? The next situation is we should have calculated based on total assets, and if you calculate based on total assets, the 30 million assets compared with the total of 130 million would be more than 15%. So that means that's significant. Now what else? So here, number one thing is it's a significant component. So it says that it's immaterial, therefore only analytical procedures are being performed. That's an incorrect way of doing it. We should have performed all sort of procedures on this specific company because it's a significant component. So it includes correspondence with the component auditor, and at the same time checking the work of the component auditor, deciding if we should place reliance on the work of the component auditor. There are going to be a lot of things which need to be considered as an auditor. What else? So that's what you need to talk about here. Next is Desi company restriction on international trade. It says as well as being involved in chemical engineering and supplying chemicals for use by other group companies, Desi specializes in producing chemicals which are used in agricultural sector, and around half of its sales are made internationally. Desi is audited by Foxglove & Co. and the group audit working papers contain necessary evaluations to conclude that an appropriate level of understanding has been obtained. Foxglove has provided you from a summary of key audit findings which includes following statement. During the year, new government environmental regulations have imposed restrictions on international trade in chemicals, which says to many countries now prohibited. It says our audit work concludes that this does not create significant going concern risk to Desi, and we've confirmed that all inventories are measured at lower of cost scenario. Now it says the group audit manager has concluded, I'm happy that no further work is needed in this area. We can rely on the unmodified opinion to be issued by Foxglove & Co. This issue was not identified until it was raised by Foxglove & Co. It has not been mentioned to me by group board members, and it has no implication for consolidated financials. The draft financial statements recognize total assets of 8 million and a statement of profit of tax and so on. Now see, here, the overall issue in this scenario is that the management has not disclosed anything to you with respect to what the Foxglove & Co. has disclosed. That means there is an issue about the integrity of the management. So you need to actually be concerned about it, that the integrity of the management is at risk. So should we continue as an auditor with them or not? The next thing is basically, if you look at it, the manager says, I'm happy, no further work is needed. That means the manager's competency is in doubt, because he has relied by closing his eyes on the statement submitted by Foxglove & Co. Furthermore, you could calculate these total assets of 8 million to check materiality, the profit before tax of 50,000. Additionally, a goodwill of 3 million is also recognized. Last year it was 3 million also. So have you not tested it for the impairment? Let's have a discussion about the marking scheme for this specific area. It says up to 1.5 mark for each relevant point identified and explained, allowing maximum 1.5 mark on the competence of group audit manager and the need for additional training. These marks can be awarded in any section of the question. Now, look at this and then we can move forward. Um, okay, so these are few matters pertaining to it. Now let's move forward. Okay, the next question is, which is question number 3, which says you are you're a manager working in the public sector department of Fern and Co. You're responsible for the audit of Mosswood Hospital for year ended 31st March 2017, and you recently visited the audit team who are currently on site. So can you just go through this question in a quick while and we can move forward? Okay, number one of them is identify and explain the ethical and the professional issues raised and recommend actions which should be taken in respect of the matters described. Now, if I talk about it, number one thing is it says you are a manager working in the public sector audit department of Fern and Co. You are responsible for the audit of Moosewood Hospital for the year ended 31st March 2017. You have recently visited the audit team and who are currently on site performing the field work to review the work performed to date and to discuss their progress. During visit, the audit senior informed you the following matter. During a review of the valuation of medical inventories, including medicines used in variety of treatments at the hospital, it was noted that a number of items had passed their recommended use by dates. These were recorded on an inventory spreadsheet maintained by financial and were easy to spot because they were highlighted in red. One of the audit team inspected a sample of inventories in question and confirmed that their use by dates had expired. When asked about this, financial controller stated that audit team must be mistaken. The audit team requested to look at the spreadsheet again, but he refused. Next, the finance director confronted the audit team, accusing them of extending the investigation beyond their remit. He also threatened to remove them from the premises if they continued to ask questions which were not relevant to the audit of hospital's financials. Since the audit team have been unable to complete their audit of medical inventories, they've also noted that the room where the inventories were previously kept has been emptied. Now, see, the question's requirement is comment on the ethical, professional, etc. issues. What are the issues? You remember we discussed from yesterday's thing that we need to identify that could there be an issue. Number one, fundamental ethical principle of integrity. Is there an issue of integrity? The answer is yes. Why? Because the manager is not letting you access and the financial controller is not letting you access them, and he is instead the finance director is instead confronting with you. So that means that the management's integrity is in doubt. They are not telling us the right information. Objectivity will come on to that. The professional competence and due care is there. The confidentiality would be there, because you see what would happen is, as an auditor, what do you need to do? Here the public interest is involved because we are talking about medicines. And when we are talking about the medicines, so in the case of medicine, the public interest is involved. As an auditor, you should not stay silent. You should actually speak out as an auditor that this is something that is an issue. So the confidentiality could be breached, but you need to take the legal advice before you can breach the confidentiality. Now next, professional behavior. It's professional on part of us, but not professional on part of the management. That means they lack professionalism. Then do we have a self-interest threat? Apparently yes, because we are dependent on them for fee, but not necessarily that we shouldn't be highly dependent. Might be there could be just one of those clients, so don't mention that. Self-review, no. Intimidation, yes. They are intimidating us. They are intimidating us with respect to a sort of that they would throw us out of this premises. It's a sort of physical sort of intimidation. So this is something that you need to understand and you need to identify. So what do you need to do as an auditor? First of all, you need to communicate with those charged with governance. Now, why do you need to communicate with those charged with governance? The reason behind that is those charged with governance might not even know about it. It's just the management who knows and who is actually hiding. So you need to bring it to the notice of those charged with governance. If those charged with governance also don't react, then what else? Then you can actually go to the audit committee, because it's always first management, then those charged with governance, and then the audit committees, so you can actually refer it to them. No, auditor is not from public sector. You are a manager working in public sector department of Fern and Co. So basically it's a department which focuses on public sector. That's what it is trying to say. Now next. It says in addition to the audit of financial, your firm also is required to conduct an audit of the performance information of Moosewood Hospital. You are required to provide assurance with regard to both the accuracy and the completeness of the three key performance measures which are used to monitor the hospital's efficiency and effectiveness. The performance measure, all of which the hospital claims to have met, are to maintain average profit patient to nurse ratio of no more than 6:1, to achieve minimum 75% annual usage, etc. Now it says the difference between performance audit and the audit of performance information. So it's very simple. Performance audit is when you are auditing that how has the entity performed, that's performance audit. The auditing of performance information is basically the management has produced an information and you are auditing that information, that if that information is being prepared correctly. One of them is evaluating the performance, the other one of them is evaluating the information produced by management pertaining to a performance. Next is recommend examination procedure, which should be used in auditing the performance information of Moosewood Hospital. Now see, we have gone through similar type of questions in yesterday's and day before yesterday's class, that the examination procedures to be used in the auditing of performance information. So what are the information? It says to maintain average patient to nurse ratio of more than 6:1. So what you can do is that you could see how many nurses are there in the payroll. You can inspect the nurses in the payroll. You can actually see how many patients have been admitted and how many patients have been there for a constant period at a time. So you could randomly pick out the nurse to that ratio. So the surgical rooms, you could actually recalculate the accuracy. You could assess the overall capacity of the surgical rooms. Performance audit is basically, I am a company and I want, like for example, let's say my college is Scriber College. I want to evaluate the performance, that how well has my team performed. So I might have the set KPIs, but I would want to know that how well has my team performed. So all that I'm going to do is that I'm going to hire somebody, I'm going to ask them that evaluate their performance, audit their performance. So that's performance audit. Now what is audit of performance information? My team has produced an information that we have performed this is how we have performed. This is our information, C. So I might actually ask somebody to audit that information produced by them. That's the audit of performance information. First of all, so you would actually calculate the capacity of the surgical rooms. You might actually compare it with the overall usage. Then it says to ensure that the rate of admissions within 28 days from previously treated does not exceed 3%. So you could randomly pick out the passengers, that when were they admitted and when did they leave, and you could perform those scenarios. That's not important. Success rate is not important. You need to test what is required. You need to test if that is being used minimum 75%. So that's what you have to check. You don't have to calculate the success. You could go through this area. Okay. Abir, we have limited amount of time, so that's why, unfortunately, if I take a break, then we won't be able to complete it. So that's why I'm even rushing a bit. Rohit, the confidentiality threat arises is basically you have obtained the information about the expired medicines during the course of the audit. So if you have obtained this information during the course of the audit and you make it public, because you have to make it public. Why? Because it's a public responsibility that you have to do it public. Rana Imran, I will try to cover it up. Okay, have we gone through this question? Imran, Ishaq, Ishfaq, I did explain the performance audit and performance information. I said that let's assume that there is an organization and you need to check its performance. So if you need to check its performance, so you will perform the performance audit. Now, the audit of performance information, now what does that mean? The audit of performance information actually means that the performance information, the performance report is being prepared by management, and you just need to go through if it's being correctly prepared or not. Okay, if we have done this question, then let's move on to question number 5 and see if have you people attempted the question, have you people read the question? Salman, wait for a while, I'll discuss, don't worry. Kindly go through this area so we can move forward. Okay, now it says you are a manager at Time & Co., a firm of chartered certified accountants. You are currently involved in the completion stage of 2 engagements relating to different clients. Both engagements have raised the issue that require your attention. Now, requirement is comment on matter described above and explain further actions necessary before auditor can sign the report. It says describe the implications for the auditor's report if no adjustments are made to financial statement. Now see, it says Rocket Company is a listed client operating in engineering industry. So it says Rocket Company is a listed client operating in the engineering industry. The company manufactures machinery for use in the aircraft, defense, and marine sectors. So Rocket Company is a listed client operating in engineering industry. The company manufactures machinery for use in the aircraft, defense, and marine sectors. It says audit for year ended 30th April 2017 is almost complete and revenue and profit records are so and so, so and so, so and so. Now, if you look at it, the revenue is 1437, profit is 139. Last year it was 1489, that means the revenue has gone down. Last year the profit was 175, that means then again the profits have also gone down. Now, audit procedure identified 2 sales transactions in final quarter of the year that related to 2 different customers, but where the goods were delivered to the same location. Further investigation revealed that goods were delivered to a third party who agreed to store them until the customers were ready to receive delivery. The goods have yet to be delivered to the customer because they are both building new facilities and neither is sufficiently progressed to receive the new machine. The contract terms explicitly state that Rocket Company is obliged to deliver goods to the customer for final inspection and acceptance, and the client has not agreed to any consequent amendments to these terms. Sales invoices were raised and revenue recognized upon the dispatch of the goods to the storage facility. During discussion with audit team, finance director stated that the company has fulfilled its contractual obligation. The revenue attributable to 2 transactions total 17 million. So first thing is 17 million divided by 1437. 17 million divided by 139. 17 million divided by 139 is going to be, you would come across this thing that this is something which is a material item. Now, what's the problem over here? IFRS 15 revenue from contracts with customer. It states that the revenue recognition has to be, there has to be a 5-step process to revenue recognition. Now, what is that 5-step process to revenue recognition? So the 5-step process to revenue recognition is, number 1 is identify the contract. That is, you need to identify the contract. The second thing is that you need to determine the performance obligation, that what are we obliged to do. The third thing is determine the transaction price. The fourth thing is allocate the transaction price between the performance obligation. And the fifth thing that needs to be done is recognize the revenue as the performance obligation is satisfied. Now here, if we talk about it, so if we talk about it, what we need to discuss is that whenever you come across such a scenario, so what actually happens is, here the scenario is that the 2 sales transactions were recognized in final quarter and they were delivered at a premises which is basically owned by a third party who agreed to store them until the customers were ready to receive the delivery. Now it says Rocket Company is obliged to deliver the goods customer for final inspection and acceptance, and the client has not agreed to any consequent amendment to these terms. That means the customer, your agreement with the customers is that you will basically deliver the goods to them, and till the time the goods are not accepted by them, the goods are not considered to be delivered. You had manufactured it, you didn't have a space, so you were supposed to deliver it to them. Now what to do? If you were supposed to deliver it to them and you could not deliver to them because they don't have the premises ready, it's an arrangement, it's a bill and hold arrangement. So what's a bill and hold arrangement is basically generally the customers are going to take delivery of it when they are ready. So you can't actually recognize the revenue right now. You need to actually be you need to actually consider that if you should recognize right now or not. Apparently you can't recognize the revenue. So if you can't recognize the revenue, that means that this transaction needs to be reversed. No, you don't have to. Okay, now, so this is basically the last area is about the assurance report. You could go through this area from your books, where you could actually have a checklist of what exactly are the things that we need to consider whenever we are preparing a forecast report. So what I'm actually going to do now is that I'm going to have a quick discussion. See, now the paper P7. What exactly leads to the paper P7's failure? Number one of them is the students, they don't know how to draft the answer. The students, they don't know how to actually score the marks. So the most important thing right now, what you need to do is you need to actually pick up the entire thing that we have discussed during these last 4 or 5 days, and you need to actually review them, go through them, and once you have actually gone through them, so you need to actually write down an answer plan first. And when you write down the answer plan, you compare that answer plan with the marking scheme. So once you compare them with the marking scheme, you'll get to know where exactly are you getting the marks. So what you need to do is that you need to compare them with the marking scheme so that you can understand that where exactly are going to be the marks available, because that's where the biggest problem arises. Students, they don't know that where the marks are available. So if you don't know where the marks are available, how will you score the marks? So that's the first thing. The second thing is you need to go through the quick summaries of the accounting standards, because they are important. And the third thing is, at times our students, they love to do what they know. Like for example, if you are good at questions pertaining to risk, so you might actually be practicing the risk related question, which you should not be doing. What you should be doing is you should be focusing on the areas that you don't know. So that's what you need to focus upon. All of you know your weaknesses, so you need to consider that your weaknesses are being addressed. So these are the few exam tips that you can consider from my side, and the rest is I'll be available on the WhatsApp group. The link is available to you. You people have gotten connected with me on that WhatsApp group also. So I'm gonna cover up a few other areas which I think would be okay. For the time management, what is very important is a lot of students they fail because of this reason also, that they are unable to complete the paper. You see, whenever you come across a question, the simple rule is it has to be 1.8 minutes per mark. So let's say if there is a question which is question number 35, question number 1 of 35 marks. So if there is a question number 1 which is of 35 marks, so you've got 35 into 1.8, which gives you 63 minutes. Now, a lot of students, 1.95 marks is available because reading time, but I'm ignoring that right now. Say 1.8. So if you actually have 63 minutes for attempting question number 1, or say 65, so how to tackle? Because what happens is at times when we start attempting question number 1, so generally in the 63 minutes we would have attempted normally 25 marks. The 10 marks would still be remaining. So if the 10 marks would still be remaining, so how to address that? The simple way to address that is you should move forward. Because the 10 marks that you will try to attempt, you will not score good marks amongst them, because that's generally an area that you don't know. If it's an area that you do know, then write it down as quickly as possible. But if it's an area that you don't know well, then try to skip the area, because then you will spend 15 more minutes and you'll only be able to get the 2 marks out of the 10 marks because you don't know that area. So important is, as soon as you are done with whatever you know about a question, just move forward. And try to do it within time, and don't panic. Just try to be calm, just try to be cool, just try to do the basics right, and you will be through. Wali, might have sent you the WhatsApp link in the message. Okay, from and Wali, I'll send across. I'll add you people. No, Anchal, it's not like that. Okay, Hein, we did discuss the tips. Poonam, I'll try covering that. I'll try to cover a brief video of that forensic in the group. Okay, Wali, I will. Hein, you message me. You people have my number. My number is okay. Thank you, everybody. Thank you for your time. Hope to hear good news from you all, and I shall inshallah be available to guide you people further. So let's stay tuned, and let's be in touch. Thank you very much. Thank you all. Sure. Thank you. You all are welcome. Sumaya, have you studied from me earlier some subject? Rabia, can you please repeat your question? I'll answer. Okay, Sumaya. Okay, Rabia, the important articles are the latest 3 articles that have been that are available. You go through them, and that's going to be sufficient. And for the important past papers, I would suggest last 4-5 attempts. No issues. No issues. Ifra, you attempt it. You will be able to attempt it. You just focus on these lectures and just try to actually be exam focused. Saklan, I would share a few things. Wali, please prepare answer plans. The past papers are not updated. Ideally, revision kit should be taken, but the problem is we don't have the latest version of the revision kit. So the latest revision kit version is not easily available in the market right now. So the better approach would be that if you come across a question on IFRS 16 and IFRS 15, like leases or revenue, so it's always good to actually be a bit careful with them. Okay. Thank you very much. Thank you for your time. See you soon, inshallah.